What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with another MULN price action and statistical update. Before we get started, please make sure to subscribe to the channel and share this video with a friend so that we can get more people who want to learn about the trade in here. With that said, let's begin. MULN faced a pretty good price action today, huh, guys? We were able to see that we were going to get some type of an upside based on yesterday's analysis. So I want to explain a few things here to you guys. First of all, I know that this chart is looking a little saturated right now, so this is why I can just take off a couple of things. But the reason why I have three different Fibonacci retracements here are for ranges, actually. So if you can see this little circle and this little circle, this is telling you that I'm measuring the Fibonacci retracement on this particular instance from this candle here, which was the first day range, to this low, or this one here as well. Now this Fibonacci retracement is measuring from the total upper range. So it would be from down here, which is about this low here, to this high. And this Fibonacci retracement is measuring, there's a reason why I'm telling you all this. Just hold on just a sec, you guys. So it's measuring from here to here, which tells us, which is going to just give us the Fibonacci retracement ratios of today's price action. So this is today's range, and this is why I have it here. Okay, so first of all, let's start with the moving averages. We are still above all of the major moving averages, and we are using the 7-day exponential moving average and the 10-day simple moving average as a guide to the top. We are still currently within this formation. Please remember that ascending channels are typically a bearish formation, so we would have to respect that to some degree, of course. But okay, so I am looking at what could be a potential bull trap. And I can't confirm it just yet, but we're looking at a potential setup here. I'll get to that in just a sec. But it's just we're like massively running up right here, and some levels are presenting right now that could easily play into a liquidity trap here. So our price action on this particular candle from today has you can see the levels up here. So we're going to look at the high. It has a high of 59.13, which is very confluent with our 59.41 one spot 618 that we were talking about yesterday and a couple days ago as well. So we definitely reached the golden ratio here, and these are hourly candles right here. So as you can see, we actually came back down, and we are now within what we were talking about. We're within the golden pocket, and this is the golden ratio, right? Some people consider it to be in between the 786 fib, which would be around here, and the 1 spot 618. But I don't like to have the 786 in here. I'm using the 1 spot 786. I use the not 786, but the 1 spot 786 is just giving me too much information that I typically don't need. But if we were to have it, we found support at it with this candle, right? But we are trading within that golden ratio, so it's important to know, and it's important to see that different areas of ranges between the Fibonacci retracements are being respected with further dates of trading, or further trading sessions, better said. We do have the not 786 as a form of support here. It's acting as support for us. Now the 786 is not that great of a ratio in comparison to the 272 and to the 618. So it's pretty important for us to notice that. Let's look at the bull trap scenario here that I'm talking about. The bull trap can work. We touched on the 1 spot 618 today, right over here, and it looks like we're starting to recover once more. There is the likelihood to where we can use the 1 spot 618 as the bull trap, right? We can ride up to the 2 fib and then start retracing back to the downside. However, I don't know that that could be as likely as us maybe using the today's range 1.618, which would be right here. And I know this box is kind of coloring it a little weird, but it's at about 65 cents. And that 65-cent 1.618 could be, and this is of course riding up to the previous range 2.272. There is the potential to where we can ride to this 65-cent 1.618 and finding an immediate capitulation event. And there is also a third possibility for the bull trap, you guys, and this is particular to a bear market. These large wicks like this one here. You see wicks like these happen, and also also to the downside as well. And these are just tactical moves by day traders and institutions, professional traders, right? So we could potentially see a massive wick up to the top, and potentially touch our 2.618, which is confluent with our channel resistance at the very top. So if we did get to test that, which would be the 1, 2, 3, maybe or actually no, this one's not really. This can arguably be one, but not. But the reason why I'm saying that it probably isn't is because usually after the third test of an ascending trend like this is the test that kind of presents the capitulation event. So we have 1, 2, and we're potentially reaching the third one. So if we did reach that third one, it's very confluent with this golden ratio here, the 2.618. So we can actually touch it and then eventually come down. This is best case scenario, you guys. And I'm only saying that because the third test of the resistance, and because it is also a ratio of a desired ratio, and also because bear market wicks like these, I'm just giving you a raw price action type of analysis or an opinion on it, right? Please reach out to me on Discord or on Twitter so we can discuss further about this if you have other thoughts regarding that. But that's kind of what I'm looking at, you guys. And this is a heavy amount of price action already going to the top. Another reason why we can potentially see that it could be a form of a bull trap is primarily because of our volume profile as well. Now, I don't always look at the volume, I know, you guys, but if you can take a look here, we're actually making lower lows on our green candles. So that means that buy volume is actually decreasing now. So that is, that should present us with some type of a warning as well. It's clear. So now let's go ahead and finish up with this chart here and jump into the statistical side of this analysis, because that, my friends, has some pretty not so desirable things for the bulls. And before we get started, just know that what I am talking about here is based on statistical metrics. They are not whatsoever what I believe or what you believe or what the mass sentiment believes. This is just based on backtesting of historical data, particularly momentum versus volatility. And the metrics that I'm going to present to you right now do have some interesting targets for us to keep in mind, and to also for my fundamental analysts, try to see if there is a potential something coming up that can make MULN either go up or down, similarly to the acquisition that was just announced or happened that made us run up a good I think 30, 40, 50%. I forgot what it was. I haven't even measured that just yet. But this is the analysis that I've been mentioning to you guys for the last few videos that I haven't gotten done just yet, and now I did. So let's get down into that dirty business. So I am talking about. Let's explain it for the new viewers, right? We are looking at volatility here, you guys. Volatility is represented by this indicator, BBWP. Volatility is direction neutral. Only because we're at these critical highs and starting to pitch down to the downside does not mean that we're going to necessarily go down. Likewise, when we're fully contracted down to these levels here, if we start going up, it doesn't mean that price action is going to go up. In order for us to gain a bias and direction, we pair this with a stochastic momentum or a momentum oscillator similar to this one here. Now, the momentum oscillator, in my experience, has had a pretty good hit rate in guessing the direction of volatility. Well, in any time frame. So right now that we're in a higher time frame, like the 12-hour, it should tell us something, and it actually should signal some concern, because higher time frames do carry some more weight. Now, in this case, okay, so every bar here is a 12-hour read because we're on the 12-hour chart. So we've actually been tracking this for a few days now, guys. We've been looking at it since we were about here, and we've been seeing this oscillator rise to the top as we were riding this. I'm sorry, actually, we were looking at it from possibly down here. And we were looking at the oscillator continue to the upside along with volatility increasing to extreme highs. Now, these critical levels up here above the 90 percentile, which is this blue line right here, signifying 90%. When we're above this 90 percentile, these are critical extremes indicating high volatility to come in relatively soon. And the longer it stays up here, the bigger the volatility would be. So this is kind of a large read here, you guys, and we have moved significantly up to the upside since the signal fired off when we were about in this area here ish, right when we were down here. Okay, so the interesting thing here, you guys, is that the oscillator is now reversing from an overbought percentile. It's very similar to an RSI, so we can say oversold and overbought right in here. So we are currently with a downside pivot, and if you can see close enough, our indicator for volatility is also starting to contract. So the contraction phase is confirmed when we are pitched to the downside with both the spectrum line or the signal BBWP line and the moving average, which is this one right here. So we have both of them now starting to contract, and the oscillator is suggesting a downside move. I have taken note of every single iteration where that event has happened since the beginning of MULN asset trading. So this was potentially around 2012, right back over here. So every single iteration has been taken into note. These are not certainties. Remember, guys, they are metrics and they are statistical. So this is not a certainty. Okay, so out of a total of 21 iterations, we have 9 that have guessed the downside correct, and 12 that have guessed the upside correct, which gives us an average downside accuracy of 42.85% with an average downside thrust of about minus 93.47% over the span of approximately 24 and a half days. That's just close to a month, about 3, just a little over 3 weeks, right, guys? So this is a proof of work right here for you guys to be able to see. Now, every iteration does measure differently. For example, you have a minus 74 over here. You have a minus 30. Don't mind this one. This was a positive iteration. We have a minus 35. They all vary. Minus 17. So the averaged move is just something for us to keep in mind, or to use as a type of target finder, if you will. So I don't know if this is so realistic, and I'm not sure that I can actually put some weight into it, because I don't know anything about MULN stock and its fundamentals, right? But if we did subtract 93.47%, that puts us at about 3 cents or 4 cents. So that's a massive decline, and I'm not sure that we can actually reach that. That doesn't sound so realistic. I did take an inverse Fibonacci from the current position to our September 8th wick up to right here. And what's interesting is that also the man, I'm sorry, I'm stuttering, you guys. So the 3.618 golden ratio lands at 3 cents as well. There's a lot of rhyming within that, you guys. So I'm not calling. Yesterday somebody asked me if it's looking bearish, and I told them that I wasn't looking for a reversal just yet, but the indications and the metrics coming back from the statistics on this, from the statistical analysis for this ticker, are of extreme potency. I mean, it's really strong, and this is something that we could potentially look at the SPY for, right? So if we a lot of people are talking about the housing market crashing. A lot of people are talking about we are about to capitulate on the broader markets. So if that is the case, and we're starting to see some negative earnings on our blue chips and our mega cap companies, like I posted it up yesterday for Alphabet, for Google. It faced a pretty large decline, and it actually impacted the broader markets. Larger cap companies like that, mega caps, will move the markets as well. So if there is a massive sell-off event, or type of reversal in the broader markets, I can see this playing out to some degree, because the broader markets do that. Similarly in Bitcoin or crypto, Bitcoin goes down, everything under Bitcoin goes down. If Ethereum goes down, Shiba goes down, and other assets around Ethereum as well. So those are your indices per se in crypto. So I guess we have to pay attention to those things as well. Now, I did say, guys, that there is a potential upside first before we do face a bull trap of sorts. And if we do start facing a bull trap, as we decline in price, stop losses from everyone who have open positions will start triggering. And as this price goes down, short positions will add and add and add, and you'll see like a FOMO event. This would be inversely to a short squeeze. It would be more of a long squeeze, right? So it's not really, that terminology is not really used, but it would be inverse to a short squeeze. So in that similar manner, we'll start squeezing out the longs, and in that pressure, more short positions will be open, pressuring this to the downside. So this has gone up exponentially, and it's also gone up with a lot of speed. So what goes up fast comes down fast, you guys. So that's why we want gradual growth. And it hasn't happened just yet, but I am kind of giving a warning to my bulls. And this is the bulls can be facing some pain if you guys are not practicing any risk management. So please use stop losses. Take profits where you are. Take profits when you can, right? So with that said, I'm not a financial advisor. I actually can't suggest for you to sell or buy an asset. Please take whatever I do show on these videos as a form of entertainment, guys. Do your own DD. And but please, if you have any concerns regarding this, let me know. Let's go over another factor here. So this trend line here was what we called as our 12-hour bullish divergence before we got this massive run. We had called it right over here, and we said, this is, if we're going to make a run, it's got to be now. We have to hold this level, and we did. So now, if you can see the size of this bullish divergence, compare it to the size of this hidden bearish divergence that we're looking at. So if I'm not a fortune teller, guys, and I definitely don't have a crystal ball for me to be able to give you direction on these things. But if we would play this, I think that we would be wise to maybe play some long puts on this, and make an absolute destruction and massacre of money on the way down. On the way down, right? So these types of long put plays would be best if you play them out with a few months out, and out of the money strikes, right? So keep an eye on your time decay, which is your theta. That'll be your yeah, that'll be the value times the 100 shares of the contract that you would lose per day. Make sure to choose a good one. Make sure you have good gamma and good theta. No, I'm sorry, and good delta, right? Okay, so this is, please know, guys, that this is a very dangerous sized divergence here. So, in particularly bearish. So, I mean, if we saw this move from this one here, what the hell can this bring, right? So, yeah, let's just quickly look at some other time frames. Let's open up a multi-pane right here. I know this video is already getting a little bit long, but it is important for us to go over these metrics, or else we're going to be caught bag holding, and that is the last thing we want to do, you guys. So let's go down to the immediate term time frame and look at the 30-minute. 30-minute is still moving above the moving average and still has an upside pivot, which backs our thesis of still a continuation to the upside. And the distance from this area to this top, which is about 83.12%, which is an area that we've used to reverse from. Actually, we can still even go up to about 89 and possibly even higher. I remember seeing at about a 97 percentile top read of the RSI, and I think it was particular to the daily. But we do have a lot of room still to go up to the top, and judging the distance from here to here, looks like we could potentially use that 2.618 that we were talking about right over here at about 74 cents before a massive capitulation. So 74 cents, just please know, you guys, that it probably wouldn't touch all the way here. It probably would be more like 73 or 72 cents, right in the, potentially between the 2.72 and the 2.618, which this would be a desired area to open long puts, in my experience, right? But definitely use a stop loss, so it goes, if in the event where it goes against your direction, you can be stopped out with minimal losses right here and potentially find a better entry for your long puts. So let's continue on to the bi-hourly RSI and take a look at what we have here. So the bi-hourly is still moving across. I'm sorry, it's still moving above the moving average. And now that I'm about to say it, I remembered, you guys. I have to actually do this for my new viewers. So this is a typical RSI, you guys. I have split the RSI into two sections. The bottom section being the bearish control zone, and the top section being the bullish control zone. Both zones are split in half. This is bull strength percentile, and this is bull weakness percentile. We have bear weakness percentile and bear strength percentile. Anything above the 70% is overbought. Anything below the 30% is oversold, just like any other RSI. So with that said, bi-hourly is not giving us a bias and direction, other than the fact that the moving average is hinting towards the downside, and it's getting closer to the shallow areas of the bull strength percentile, which can, which can have us gravitate more towards the bull weakness. The RSI signal is still within bull strength, which could actually potentially still see a little bit of upside before continuation down. Let's go up to the 6-hour RSI and see what we got. So the 6-hour RSI is above the moving average, very bullish. The moving average is well within bull strength, and we are still suggesting with the 6-hour RSI an upside move, which also backs our upside to the 2.618, possibly the 272. Just like we talked about in this chart for over here, you guys. Now let's look at a little bit of a higher time frame. Let's go to the 8-hour RSI and see what we got. Okay, so 8-hour is already an overbought percentile, but still has plenty of room to go. The moving average is well within the bull strength percentile, and okay, so this is signaling a larger time frame upside move. So which means that we could potentially be looking at maybe one more trading session to the upside, and this can actually verify that. Our daily RSI is still pitched towards the upside. We have the moving average canceling the oversold area and moving into the into the shallow areas of the bear strength percentile. This means that we're likely to gravitate towards the bear weakness percentile. So daily is suggesting still plenty of upside, and this is probably where I told you guys that I found the 97 percentile. So actually, okay, the highest iteration looks like it was about 90. It was within the 90 percentile, so about 91%, and we are sitting at 67 spot 83. So we still have plenty of upside to go. This upside can be impulsively figured in one session, or it could be over the span of maybe 2 or 3 sessions. So what I'm giving you guys is warning for the potential 2 to 3, maybe 4 sessions, at that very max 4 sessions. So the best case scenario is that we do get a bullish move to the upside within the next day or two, and then we can face a serious capitulation to the downside, guys. But know that it can happen at any moment, and we should be practicing some very, very, very strict rules of risk management here. So yeah, like I said, you guys, we still have some upside to go. MULN is still looking very strong. I could actually see us touching within this area right up here, and potentially with some early session downside, like the 15-minute. Let's see. The 15-minute is still suggesting some upside as well. Micro time frames like the 5-minute are also suggesting upside. So yeah, we may not be able to see so much of a bearish action on tomorrow. Tomorrow's session is likely to be entirely bullish unless the markets sell off and then we just all go to hell, right? I didn't mean that, you guys. Bad joke. But anyway, that's going to do it for the video tonight, you guys. If you have any questions or concerns, please don't hesitate to visit my Twitter, visit my Discord. The links are going to be down below. I appreciate you guys continuously watching these videos. Thank you so much for the attention, you guys. Lots of subscribers within only 11 days. It's incredible. But yeah, I'm gonna leave it there, and I'll catch you at the bell. Adios.